Good morning. Good morning. Happy Monday. Good afternoon to all those in the UK and everywhere else where it's afternoon. Hope everybody had a good weekend. They go quick. They go quick. Jeez. Hey, Raj. What's up? Jiraj. Kevin. How's Cape Cod? All right. What's going on? You and I need to do a one-on-one one of these days. Haven't seen you in a while. All righty. Welcome to all the folks on YouTube. Appreciate you being with us. Okay. It's going to be an interesting month end. We have gotten above. Let's go dig into this market, shall we? So, our overnight inventory. What is overnight inventory? Okay, overnight inventory means basically a fancy way of saying where's the distribution of the overnight trading. So it's gap long. So here's our gap. This is a short position between Friday's high and the 6 p.m. overnight low, or the 6 p.m. session, the Goldback session. So overnight inventory is 100% long. Okay. Now, generally, the market profile guys say there's a 60 to 70% chance that we get a correction lower. What happens in that 30 to 40% of the time it doesn't correct lower? Well, that's the market tapping you on the shoulder going, psst, psst. We got some bids. We've got buyers. Why do we have buyers? Because traders are short here for sure. They're short in this area from 57.40 down to 56.80. That's the last cost basis that we had before this move up. Now, going into the end of the month, which is Thursday, Friday is market maker month end, Thursday is T+1 month end. We are above the position. Now, if we can stay above 57.73, we're going to take this. This is the stuff that we bought on sale. Remember, we had that liquidation? Liquidating inventory came in and they liquidated for, in this area under 73, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Count them, 10 days of inventory under 73, right? People are net long that and they need to get liquid. So hopefully, if the order flow agrees, if the buyers come in, we'll stay above 57.81 and 57.73. That's for traders who are looking for longs, 58.25. I've got some other levels here from an older chart. I'll swing them over here one sec. Hope this doesn't get upset with me. But we have to the upside, we have 57.91 quarter, 5800 and a quarter, 58.13, and then this is that 58.25 that we were looking at. There should be some supply left here. I doubt all of this is flushed out to the bid, but let's see, right? We have a new contract. People could have squared off their positions last week, right? So be aware of that. That's the upside. And of course, the down is if we correct inventory, looking for that 57.60 area, right, on the downside. We'll keep track of that today, right? Remember, it's a brand new week. It is month end. So do a lot more listening to the market than try to tell the market what you think should happen, right? The market, it's like when you're driving with your girlfriend and she's trying to give you directions and you ignore her. You end up going into the hood, getting carjacked. Just listen. The market will tell you what it's going to do. Right now, it's telling you it's one time framing or trend higher. The point of control is up here at 57.86 and change. That's good distribution. That means we have distribution, right? That's what we're here to do. We're selling stuff. We're selling ES contracts. Hey Christian, how you doing? So let's look at the zones I had for this morning. My original balance was 57.52 quarter to 56 quarter. And we double it to 57.64 quarter and double it again to 57.80, right? And then 8 times cost basis. Well, let's go see what 8 times cost basis is. So there's 4. You stack another 4. This is simple, right? You cannot get any more simple than this because it's profit and discount zones. That's all it is, right? So this is at 8 times profit. You're looking at 58.12, right? Hey, JR, how you doing? So we are in the 8 time profit. Excuse me. We are in the 8 times profit zone. Now, what does that mean? What is the okay? What is the okay, JJ? That's great. 8 times profit. What does that mean? How do I make money? What do I do? What do I do? Well, if you're buying in the 8 times profit zone, okay, when you're buying up here, you should be aware that you might not get that huge move up because you're already at 8 times profit, right? That's like buying a car at the top of the end and trying to squeeze maximum value out of it, thinking it's going to double in price. You might have to, say if you were buying 57.84, you might have to settle for 92, right? Just in case. Now, for my short sellers, how are we going to short this market? You have been able to short what they call pullbacks. Right now, everyone's saying, JJ, well, the market's obviously a long. Why would you be talking about shorts? Because I know I can bet you guys, I bet each and every one of you guys on this call, right? Out of 50 people, let's say, there'll be at least 20 of them will be short. Right? Come on, I'm not, right? Oh, Moran, the symbol is F.US.EPM25. If you need help with your rollover, just reach out to one of us. We'll help. Not a problem. So I know someone's short. I know people are short because people always short a market when it's going higher. And they always short it before they find a seller. Now, this can be inconvenient, right? This can be rather inconvenient trying to short into a market where there are no sellers, right? It can be a downright pain in the butt. So, what you have to do is there are two ways to conduct yourselves. One is you short the backfills, right? So you hit it for a couple of points on a backfill, cover, 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 hit it on a backfill, go and cover. But you don't get married to these short positions because obviously there's no long term, there's no serious selling. The sellers don't have to compete, right? And when your sellers don't have to compete, why would you short a market where the sellers aren't competing and lowering price? Right? You have to think it through. Okay, there's a business reason why your trades will work, and there's a business reason why your trades will not work. Right? If you are a short seller, you need that offer to move lower. Otherwise, you're just throwing money out the window. Don't do that. And don't short the front end of a move. Okay? The front end of a move is for traders who are net long size to distribute their position. Right? You need sellers to compete to push price down. You know, we had a nice trade here earlier this morning that we were talking about in the room. I posted it in the room, right? And I told folks, I said, this was the short that you wanted. We looked above 57.80 and a quarter, and we failed. So then you start shorting the 78s and the 79s against 80, and you use 76, 72 to cover, and then you bid this 68, 69 area, and you put, you know, if it can't get underneath 68, you take it off, right? That's a beautiful little short from 77, 76 down, cover sub at 72, cover sub at 69, and you're good to go, right? That is the look above and fail. And because it doesn't take out these levels, you pay yourself, right? That way you don't let the whole thing go back and eat into your profits, right? Very simple, right? And it'll fake you out. So when you take this and you see, oh, look above and fail, and you short it here, that's why you have your stop at 57.81, and you put some bids down here at 78. And if you can't get filled, you know there's no supply. If you have a buy order in the market and it does not trigger, it does not execute, the market's trying to tell you, hey, psst, there's no supply here, right? If there's no supply, why are you short? Got it? And the funniest thing is, I'll tell people, don't short, there's no supply. They're like, what do you mean supply? I'm like, then I do the old Scooby Doo. Uh-oh. Sounds good, Cool Gators. We'll see you on Wednesday. You are booked. Right? We were doing a one-on-one with one of my guys earlier, and we were just taking trades off this area. Right? We just drew a line at 57.82, and then we did the look below and fail, where you buy a little here, you put your stop under the bottom of these candles, and then sell into the strength of this move, just to practice, right? So that's how you could tell. The supply runs out. They don't need to sell under 80 and a quarter, so the market rotates back up, right? It rotates down when it's looking for buyers. It rotates up when it's looking for sellers. That's what's called rotation. What is it? What are we rotating? Inventory, right? It is the rotation of inventory because that's what we're doing, right? All we're doing is moving inventory. That's our job. That's what we do. Any questions? Folks in the room, so what are our trades off the open? Come on, guys. Let's show the people on YouTube that you guys know what you're doing. How do you know when business is completed and will break out of rotation? Great question. Okay, so say we have a rotation here. Check this out. You see this? There's like a rotation right here. Right? Say I use that. Those highs, right? And I said we're rotating here. When you break out of the rotation, what has happened? If we break out higher, that means this price stability has brought buyers, right? And you can lift the offer. So the offer will lift and stay. Now, how long will it stay out of rotation? The answer is you don't know because it depends on the order flow. In a trend market, longer, right? In a look above and fail, shorter. And if you're having trouble with this, don't worry. Nobody pops out of the room trading like this, like, like a rock star. That just doesn't happen. Okay. So take some time to understand what is going on. What is creating the chart you're looking at? Once you understand what's creating your chart, then you can actually kind of clue in a little bit and start watching the price action and going, oh, yeah, okay, that makes sense. The sellers have to mark down price because nobody's willing to buy it at higher prices, right? We got to put it on sale. That's what it's all about. Once you start thinking like that, your life will become simpler. Chances are pretty good on a backfill. It all depends on the order flow. I'm hoping for a backfill. Now, what's a backfill? That's going back and filling in all this demand that you created with supply. That is the short trade that everyone is looking for, the correction to overnight inventory. So let's say you're short now. Whoops. Right? Say you're short. You're short in this area here. Well, how do you manage the risk of that trade? What do you do? Say you're shorting this, right? You're selling the 87s, right? You can see that there's a seller, how they step down, right? As the market comes up here, you'll sell some at 87, you'll sell the 88s, the 87 and 3/4. Now, where's your danger zone? Danger zone is if we get over 88 and a half, right? Because if you lose that seller, you're in trouble. Make sense? So I don't know if we are going to correct inventory or not, right? I'm not a genie, right? The odds are pretty good. What are the odds? I don't know. I don't care. All I care about is watching the chart to tell me if the seller is going to step in. Now, if I'm short 87, 88, right? If I'm short a couple of contracts between 87 and 88, if it gets over 88 and a quarter, right? Gets over 88 and a quarter, right? It'll give you warning signs. Look, there's a seller right here at 87 three quarter. If that seller goes away, that's your first warning sign. There's warning sign number 2. There's warning sign number 3. So you can get out of your trade, right? See, it's got to make sense, right? Each trade is a business decision. And if that business decision doesn't make sense, why would you allocate capital to a business decision that doesn't make sense? I'm going to sell poopy flavored lollipops. That ain't going to work. Nobody's going to buy that. You don't even need to do any market research, right? If your seller goes away and you're short, you got to get out of the trade, right? So say you're short a couple at 87. Well, that 87 and three quarters is warning level. That's DEFCON 3. Or is it 2? I don't know. Does it go in reverse? Right? So that's your first warning level. Second warning level, 88 and a quarter. Get ready to cover. Your hard stop should be at 88 half. Now, in volatile markets, it's a bit of a pain because it could run up, stop you out, and then fall apart. Right? No, I do not. I do not use bracket orders because I'm old. And I've been trained to do everything manually. You see, when we worked with market makers, it was a badge of honor to be a fast trader because slow traders were unemployed traders. This is before algorithms and the 0 and 1 mafia took over everything, right? We used to trade on the phones. So I could hit 6 bids simultaneously using telephones, right? I'd have 2 lines on each ear, and then I'd have my partner pick up a couple of, and we could hit 6 bids simultaneously. Why would you want to do that? Because you need to get out of your client's stock before somebody else scoops his buyer. Because if you've got stock for sale, you can bet your bottom dollar somebody else does. And if you do not hit that bid and your client does not get a fill, guess what? You're unemployed. There is a way to make trading decisions solely off market profile. But guess what? With 100-point ranges and 80-point ranges, your risk is very, very difficult. That's why I have the 1-minute candle chart next to the market profile. When I first started trading market profile in 2012, when I discovered it, I found that it was very accurate. It was great. You could do value area high to value area low trades, all that sort of stuff. But then the algos came in and the algorithms and the ranges got huge. So the stops are very far away. So say if you're long 77 and a quarter here, right? Or 77, say you're long here, right? Structurally, your stop is going to be 71. That's too much heat for me. I don't want to pay 6 points on a stop. I'm cheap. So if I look to the chart here, if I was long, sorry, let me just get rid of this. So if I was long, where, 77? I would have a place. You know where my stop would be? If I was long 77, I would go and I'd put my stop here. So if it takes out this little group of candles, if I'm long here and it takes out this group of candles, I really don't want to be in the trade. That's why I like TPO and candle next to each other. They tell you where the half an hour stops are, and this will help you judge where the order flow is on a minute by minute basis. Does that make sense? So if you have a large account, right? If you have a big account and you can hold a 6 point, I'm still cheap. I don't like. I like having cheap stops. You get the live. Yeah, no, I'm not live the entire day, but when you're in the room, right? First of all, you get to talk to me all the time, anytime, ask questions, um, access to all the educational material, stuff like that. You know, I try and answer people as much as I can on YouTube, but you know, my guys in the room are like mutes right now, so they're not saying anything. That's why I'm talking to all the people on YouTube. You guys are asking more questions, but right, you get sort of preferential treatment, right? And ask anybody who's in the room. You know, I'm in there usually from 5 a.m. UK time till around 9 p.m. on and off, right? So, and that's why we don't BM, we don't, we're not trading, we're not charging $200 a month for the room. It's a $39 room, right? So it's like cheaper than going to Starbucks every day, right? I do a lot of teaching in that room. We do Zooms. I do a lot of price action labs for the people in my coaching class. Um, it's just another step forward, right? YouTube is to bring you guys together. I like talking to a lot of people, and you can come try out the room. If you don't like it, well, it's a 7-day free trial, right? The other thing too about the room that is good is that I'm an ex-institutional trader, right? So I don't really understand a lot of the problems that you guys have. I have a lot of them, but the way you guys look at the business takes time to wrap my head around. When you enter the trading room, there are people just like yourselves, normal civilians, right? Who aren't in the business and they understand and they've taken what I've done and they've translated it like from alien market maker language into like human trader, right? So they can help you in a way that I can't. I mean, we've had the room now for 5 years and it's become a nice community. It's become a nice community where people help each other. It's not one of those beat your chest trading rooms. So if you're into that, it's not for you. We all learn together, and even myself, I always learn something new every day. It's and that's really what it is. Give it a shot. See if you like it. If you don't, no harm, no foul, right? Yeah. I I've been wanting to do live streams for a while. I didn't because I wanted to really make sure that I could find a way to communicate with regular people, who aren't ex market makers, they're just regular people trying to make a living, trying to scratch out some extra dough every day to make their life better. And all I want to do is help them get some practical knowledge so they can have a repetitive sort of system where they train themselves to think and act like a professional trader, right? Ah, great question. How do you determine if overnight inventory is not correcting? Okay. You're getting good questions from YouTube guys in the room. Come on. Yeah, step it up here. Okay. When the market opens, we're going to watch the lower references. Okay. Geez, you guys, you're getting put to shame here. So, how do we know that it's not correcting, right? We watch the levels. And the thing is, that's a good question. You know why, Slippy, is because in this market, sometimes it takes like an hour and a half for inventory to correct. That's why I like trading in and out, because sometimes I can trade long. Like, say it opens and it doesn't say we open and we don't take out 57.82, right? And if we don't take out 82 and we don't take that 80 quarter, right, we can maybe flip and go long a little bit, make a little scratch going long. For as long as that continues, when the buyers run out, then the overnight inventory will correct. But that might take an hour. That might take an hour and a half. That's why I like trading on a quick in and out day trader time frame, because it tells me what the market is doing on, let's say, on a short term basis. And that helps me tell traders who are trading longer term what's going on in the rotations. And when you trade those little rotations, you kind of get wise. You're like, oh crap, this could happen, right? So you're not caught off guard, right? Gap rules is don't just short the gap blindly. Okay, Travis? So overnight inventory is long. Let's go over this. The gap rules are great, but don't just memorize stuff randomly. So we opened, say you're shorting, right? You're putting out shorts at 80 and a half, right? Put a bid in at 78 and a half, boom, cover a little bit, right? You're shorting with the flow of business, right? Overnight inventory is correcting lower. Now there's a couple of stops down here at 77, right? I think the biggest thing about gap trading is don't just blindly short thinking the gap is going to fill. Does that make sense, Travis? I want to take those rules and I want to make them a bit more practical, right? So if you're short and the market takes out the stop, well, your next set of stops is all the way down at 70. So if we accept under 80, right? If say you're short 77, 78, right? And it gets up to 80 here, watch to see if there's a seller, right? If we lift over 80 and start offering 81, 82, well, then you know you're in trouble. Know what I mean? Otherwise, what people do is they'll just short every single rip, and next thing the thing's like 20 points above their entry, right? So there's a seller at 80 and a quarter. Now wait for the next candle and see if that seller price competes lower. What's going to happen here, right? We got sellers at 80 quarter. Next 7 seconds, the next candle is going to open, and see where the top of that candle is, because that's where the sellers will initiate. Here we go. Come on up. Come up. Come up to 80, 79. Come on. See, okay, there's a seller right there. See? Offers moving lower. The sellers are competing at 79. If they get cleaned out, the offer will move up to 79 three quarter. Watch. Boom. If we start offering and printing 80 half, right? 81, we could be in trouble. So there's a slight inventory correction, but the shorts came in and started buying here. So if you're just shorting here blindly, now you're eating foam in a massive wipeout. Make sense? So now you know, if we accept back over this, right, we found the bid at 77. If we take out that A high, right, we'll be looking for sellers at 85 and change, just above that overnight POC. There should be some supply up there. See, the levels are working okay. 84 and a quarter worked, right? So if you were long 81, 80, sell a little bit, right? Don't be greedy. Sell your contracts, right? See, look, there's a seller right there at 83. Do you see? See, there they are. There they are. Can we clean them out? Do we have enough order flow to clean them out? Because if we can't take that top of the candle and move it over 84, then this thing is not looking good, right? Just watch. There we go, right? Now, if I trade and I make a couple of mistakes, right? Like I noticed I went in and I bought one at 83. I was trying to get 81, 82, and I botched the trade, and I bought 83 and then I just scratched it. Right? I was just one micro. My execution's not that great this morning. Right? I got a little bit of weekend brain. Right? So when that happens, I just kind of chill out. Right? Admit you're wrong early, and that's okay. Right? Indeed, I have. So these are the levels, if you're long, that there's going to be sellers. They started to sell before those levels. That made me scratch that 83 long. And it was crappy trade location. Right? It might work out, but the way I traded it was sloppy. So as soon as I immediately got out of it, right? Know when you're. I'm a little off too because I know this sounds ridiculous. I'm trying to drop some weight, so I'm on this fasting thing. I haven't eaten since Saturday night. So the second day you're a little loopy, right? So I might not be that smart. I could see things, but I might be kind of moving a little slow or a little like, ugh, right? Let's see if we can clean out that 86 seller and go up to 87 and a quarter. Yeah, and the 10,000 steps. So knowing if you're not 100%, you kind of dial back the old risk a little bit, right? There's no reason to just blow money. See, it is working out, but I didn't have the best trade location. There we go. See, there'll be a seller at 87, 87 and a quarter. So this is where we had an inventory correction for what? 3 minute inventory correction. Hey Joe, how you doing? How's life on the other side of the street? Getting ready for the end of the quarter? No kidding, eh? See, this is the price action that gets short sellers too, because it looks so creepy and slow. But if you look at the candles, we're one time framing higher. The lows are getting higher and higher, which means the bid's chasing the offer, right? If we take out that 90, it's going to take out some stops, right? So the market, there's no significant, meaningful correction to overnight inventory. The market is bid. And do we have news? Oh, that's good. That's good stuff. See, in our room also we have people who work in the business. So they give us, I mean, I worked in the business, but I was a paper hanger, right? So we have actually legitimate people who work at money management firms, prop firms, things like that. Um, and they give us insight on how the other side acts. Like I've never worked at a a place that manages huge amounts of money. They think differently. They act differently. It's a different business. Now, a market profile trade, which is nice in situations like this, is to if it comes and does a look below and fail of the overnight high and comes back up, you can take a long and put your stop there. I didn't take that trade. As I can say, I'm a little slow today. So when we get that news, we might have that correction to overnight inventory. Let's see. But I don't know for sure, right? So as we creep upon 5,800, there's 96. That's one, two, three, four. That's halfway up this zone. Let's see if there's any selling at 96 quarter. Hey, nice work, Brad. That's very good. We really admire the dedication that you've put in. Nice. That's beautiful. That's a beautiful trade. That's great. You've really put in the work. You've been in the room every single day and you've worked your butt off for this. It's great to see. Really happy. Okay, where's our next stop? 5,800. 5,800. Let's see what you got for us. Now, there's got to be some front running. You would think there'd be some front running. So now, shorting, right? Everybody wants to short. If you are a gun to your head short, do you know what I mean by that? There are people who sometimes trade like someone's holding a gun to their head. I got to take this trade, right? So if you are short under 96 and a quarter, 96, go put some bids in at 92 and a half. And if you don't get filled on your 92 and a half bid, then you know there's no supply. It's printing half there. You would have gotten filled, right? So if you were short under 96 quarter, right, put your bids in, make sure you get filled, right? And then now go and put a 90 half bid in. And as soon as it offers back up over 93, right, then you could get that big covering candle. Till then, right, you can stay short as long as the offer is not lifting, right? But that's how you trade that short. right? And I'm talking, the gun to your head crowd, right? Some people just have to trade, right? So if you tell people not to trade, they'll trade. That's the first thing they'll do. So the way I like to do it is I like to say, okay, listen, don't trade before the news, but if you are short, this is how you manage your short. We know you're going to do it anyway. So, it's like drink responsibly, short responsibly. Okay, if you're going to short, at least be responsible about it. The thing is, going into this month end after this sell off, it's really hard to know what the order flow is going to bring this week. What do I mean by managing risk? Good question. Managing risk means you take money out of your trading account, right? When you take a trade, right? You put capital at risk. Managing risk means taking trades that make business sense that are according to your way of doing business. So if things go wrong, you can get the hell out of the trade before you lose all your dough. Does that make sense? Risk management is just a really fancy way of saying how to not blow up your account. Make sense? It's just a fancy way of saying don't do anything crazy. There's our news. Let's see if it watch the overnight high. Right? If you're short, your target's going to be at 90, the overnight high. Exactly. Right. Now, some traders can trade news because they're really fast. When I'm on the ball, I can trade some types of news, not all news, not like Fed and stuff like that. Right. I'm not faster than an algo. Right. But some light news I can trade if I am caffeinated and like on the ball. The way I'm feeling right now, no, I'm not fast enough to trade the news. I realize that. I put my ego in a box, right? you know, that's the thing about trading. You got to just put your ego in a box, right? Forget about it and realize sometimes, hey, I might not be George Soros or Paul Tudor Jones. Let's take it easy here. Kind of coast into the day, right? Yeah, definitely. Hey, Josh. Yeah, definitely. This is to get rid of that overnight that whatever is long is all long underneath 57.39, and then the rest of the bulk of it was here under 57.60. So Josh, if you're long, you're making some nice sales, right? Look at the point of control from Fridays all the way at 72, right? You're in pure profit, right? And you're selling it up here. It's just beautiful, right? Right? The gods of commerce are back for the end of the month. Tagged 5,800. You always need the order flow to support your trade. Your trade has to always make business sense. A scalp trade is a short term business proposition. That's all it is. But the business still has to make sense. You can't trade short against the business. It's not going to work. And you always need the order flow, whether you're a swing trader, whether you're a short, whatever it is. If the order flow doesn't support the business that you have in mind, it's not going to happen. Sorry, it's not happening. The order flow has to support the business, right? If you've got product for sale and nobody comes in to buy it, you can't raise prices, right? Say it out loud. It sounds so simple. Well, I should have been, I'm not done. The trade should make sense not on your previous experience, but on business. So, what is the business? Supply runs out. What happens to prices when supply runs out? Price goes up. So, you go long, stop, target one, target two. If the market takes out those lows, you're out of the trade because the sellers have to sell under that level. So, there's no sense being long above it. Very simple. Very simple. Is it easy? No. Right? It takes practice. When do you know that demand is gone and you can short? When sellers start competing and that offer starts moving lower, like it did here. So let's take, for example, 5,800. Okay? Say you want to short 5,800, right? Well, if you are short at 5,800, your stop should be there. Because if it takes that stop, it means the sellers have seen buyers and they're raising prices. Now, if it looks above 5,800 and fails, right, you need the market to offer underneath 5,800, right? That's what you need for a short. So you need the buyers to go away, right, and go, no, I'm not paying that much, right? And the sellers, which are the offer, right, there they are. See, they're putting it on sale. So say you're short 5,800, your stop is above the top of that candle, right? You're short here, stops here. Now, you got to take out the bottom of these candles to try and cover. Now, if the market can't take out those candles, it's going to rotate back up. If you're short 5,800, it makes business sense if the sellers compete and lower the offer. If the sellers start raising the offer, then the trade makes no sense. So if I was short 5,800, it's offering 5,800 and a quarter, half, three quarters. It's starting to not make sense, right? I'm ready to pull the ripcord. See how it's offering lower? That's what you want. Now the next candle is going to open. Let's see if the next candle offers under 5,800 and a quarter. Your stop's here. The sellers are offering lower, but they're not, it's not a fire sale yet. So say you're short 5,800, go put a bid down here at 97 to see if you can get a fill. Just in case, because if there is a big sell order, it'll hit that. If not, now you know this trade's not making sense. See? Now the trade's not making sense. If it takes my stop, I'm out of the trade. Now, when it becomes a pain is when it takes your stop and then drops, right? And that does sometimes happen, depending on the volatility of the market. We're not that volatile right now. So that's real-time information you can use. At big levels like 5,800, I like to let the large traders pick up the tab. Let them figure this out. If it's really choppy, you'll be able to tell. But hey, look at this. The highs are the lows are creeping up. See if that continues. Looks like it, Raj. I don't want to say anything too premature. But they did clean up a lot of that overhanging supply. We flushed the market pretty good. We gave it a good beating. Flushed a lot of people out of it. All the margin players, right? Going into the end of the quarter, they got out, they flushed them before quarter end, right? Something to think about, right? You flush those margin players to the bid before the end of the quarter, pick up that cheap paper, mark it up. Now you got a nice rack of lamb. So it's choppy, it's slow. It's at a big level. The order flow is slow. Nobody really wants to dive in, right? They're like, yeah, you go buy it. I'll be right behind you. That's another good question. When we see a gap, does it tend to usually keep following that gap in the subsequent days? Like now, would we expect tomorrow? If we were in an uptrend, I am listening. And if we were like, remember when we were making new highs every 2 days or every week? That's when you would expect that because you're in an area where there's no overhanging supply. This market still has overhanging supply. So if you went and looked at the daily, right, you still have all of this above us. So you got to remember, as we get up to these levels, there's going to be resistance. But say you were in this trend here, right, then it's more likely to happen because there's nothing from here to sell into it. Right? The one thing you can guarantee in this market, though, is as soon as everybody gets short, we run out of supply. It's just, it's one of those things. As soon as everybody gets short, we just completely run out of supply. Exactly. Wouldn't you? If you were size long and you had supply and you knew that you had a bunch of people trapped short, wouldn't you raise prices? And people always go, JJ, how do they know when someone's short? It's your job to know. It's your job to know if you're managing money. Who's long, who's short, who's happy, who's sad. You got to know these things, right? That's why you get paid the big bucks. And you get the private aircraft and, you know, that's why you're in that $8,000 suit, bucko. Right? How could you tell which buying is short covering? Great question. This is, okay, especially when a market falls, Christian, the first people to come in and buy are shorts. When a market takes out a previous high, the first people to buy are shorts. It's just the nature of the business, right? After a while, it just becomes intuitive. If we're in price discovery, like making new all-time highs, how is it possible to have overhead supply if we've never treated these prices? That's exactly what I was saying, right? Right now we have overhead supply, but before when we were making new highs, we didn't. That's why I was telling people to be careful shorting the thing, right? Does that make sense? Here we're not, we're in price discovery because we have short-term inventory above us, right? We don't know what's up there. But in true price discovery, when you're doing this, right, and you're making new highs, There's nothing to sell into. Okay, here there's some supply. But yeah, you're right. That's what I was saying. Here we've got supply. This move we didn't. Hope that makes sense. Well, A period's almost over. That was a long A period. Whew. Okay, you just zigged where you should have zagged there, Raj. Okay, so shorts cover, longs liquidate. Okay, so in your business, right, the business that you and your pops do, you are the supply, right? So when you sell me goods and now I can't afford those goods, I will start selling them at a cheaper and cheaper price than you undercut me. Do you understand? So say you are long, right? Say you're long 1,000 contracts under 88, okay? And you sold me 500 contracts and you sold another couple of guys 500 contracts above 5,800, right? Or let's say you didn't sell all of your contracts, right? If you say you're long 1,000 down here and you get out of say 500 up here, okay? Just out of right example. If somebody starts to sell under 5,800, you just keep undercutting them and you force them to sell lower, right? Those are trapped longs liquidating. So you just got to zig where you zag with the thing. So trapped longs liquidate, trapped shorts cover. That's it. And here's B period. Look at this. We have good distribution. Check this out. We move that point of control from 93.5 all the way up here. What does that mean? That means sales are good, right? Oh, I'm glad I'm listening. Oh, your accounts are doing better? Oh, that's great. Because think about it. Think about it as a stock on a shelf at that price. So you own something at a certain price that you bought on the cheap, but when you get up to the price where the regular price, where it's usually sold at, that's where the size sellers will step in. Get it? Just pretend you're at work. It's no difference. That's it. So right now, no, 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 don't apologize. That's good. See, I'm just trying to get you to visualize that what you do every day at work is the same thing here, except these guys are wearing nicer suits, right? So they're just hustling ES contracts. That's all it is. Except they're wearing an $8,000 suit while doing it and they don't get their hands dirty. That's all. Well, now I guess people wear like camping equipment when they're trading, but you know what I mean. Exactly, Christian. All those hedge fund managers, they wear those, like they're all dressed like they're going camping now. right? With those fleece vests and all that stuff. Shorts aren't competing. Wholesale longs and are competing to capture the buyers. Shorts compete when they're covering. Don't worry, you just zig where you zagged. You'll be all right. So what happens is the people who are long 92 to 96 sold the people at 5800 product. When they start to sell, you just undercut their price. There's a seller right here. Indeed, there is. Right? Beautiful. There they are. So if you're a short seller, say you're going, you know what? I think this thing. Let me poke a few contracts short, right? And if you're shorting here, right, 1.25, offered at half, right? Say you're short. If it gets over 2.75, you know you're in trouble, right? So say you're short a couple of contracts at 1.5, right? That offer needs to move lower now, right? So you're short 1.5. Put a 5,800 bid in, cover one. Put a 57.99 quarter bid in, cover two, right? That is funny, right? Right. That's shorting the backfill, right? You identify that there's a seller here, right? And thank you. Who said that? TJ. Thank you. Right. So TJ went seller, right? And that's what you used to do on a trade desk. You would sit there and go seller block. You'd announce these things, right? And okay, there's a seller there. I can short against that seller because other ones are going to show up and start competing. And that's it. Now, if the market started getting over 2.25, 2.5, then your business reason for that trade is starting to go away. And that's really all there is. See how the sellers came from here down to here, down to here, down to here? That's what you want when you're shorting. That's shorting the backside of the move, like we just did. Excuse me. Sorry. Could we send let me go see Josh. One sec. Oh, I know what you mean, right? This here, down to here, those aren't single prints. That's excess. But where the market stops selling off is where the bid is. So that way, yes, you could. Did I explain that right? Depends on the flow. Really found that bid at 97. Hey, look at that big green candle, right? So remember somebody on YouTube was asking, when do we consider inventory not correcting? Well, this is how we look at it, right? See, inventory still has not corrected in any kind of meaningful way. You know what, Zazu? I forgot to put VWAP back on here. Where are the standard deviants? Ah, look at that. You're right. Right. Stopped right at the old standard deviation. Few buy orders there. Now, what I'm wondering now. Remember that song from the 1980s, Wondering Where the Lions Are? If you're not Canadian, you might not. But I'm wondering where the sellers are. Until we get under 57.90, it's going to be back and forth. This should be it. Come on. If we can get under 96, look for 92 and a quarter, 92 and a half. Okay? Because they're going to front run the overnight high. If you want to hold the trade longer, you have to allow it to get to your entry, and then the order flow supports your business. Hopefully, it doesn't get to your entry, right? For me, a positive thing is right, if you're short like 58.02 and it can't get back to 58.02, then you're singing in the rain. Those are the best trades. Remember wondering where the lines are? Um, who was that? It was Bruce something or the other. It was like a Canadian artist from the 80s and the 70s. Where's all my Canadians? There's no Canadians in the room. Well, they're all young. See how they cut the sell at 96 and a quarter, 96? They just stopped selling, right? Why would you just stop selling? Well, because I'd rather sell at 99 than 96. I'm looking this up. That's it. Bruce Coburn. Wondering where the lions are. I'm wondering where the sellers are. Well, the sellers are having a good morning. If it comes to my entry, where's my stop, Aaron? So you're short 58.02. Where's your stop, my friend? Is your stop the red line? You should be using this red line as your stop, right? So if I was short 58.02, right now, this is me, and my stop was above 3, and the market got under 5,800, I'd start covering. I put my buy orders in so when the market goes down, it hits me. So then it doesn't have a chance. I'm done. I'm out of the trade, right? Now, if you're holding the trade and you're short 58.02 and see it's coming down, do some covering, right? So it's working for you now, right? Where is your out, right? When you get into trade, where is your out? What do you expect to happen, right? You need to know where your out is. If your out's already, if it's taken care of, your exit plan's taken care of. So you can stay in the trade. But watch the offer so you can take advantage of the trade. Does that make sense? You want to stay in trades longer, but only if they're economically viable, right? So the trade, if you were short 58.02 and you didn't take some off at 57.98, 97, why are you not paying yourself? You want to hold longer? Great. Now it's coming right back to your entry. Does this make sense? See, when you talk your way through it, you reason your way through it, right? Say it out loud. Now it's creeping up on your stop. So you should have taken some profits. That's why as soon as I'm short, my insurance goes in there, and then I go and I put buy orders in. So when the market goes down, it hits me. Get in the habit of doing that. That way you don't go from a trade in profit to one where you get, oh, I got stopped out at break even. I was up 6 points and then I got stopped out. Why'd you even go to work? Is that, you guys feel me? You understand what I'm saying? Right? Everybody wants to hold trades longer. I understand that. But only hold trades longer if they're economically viable, right? If they're not economically viable, just don't stand in there and let them pick your pocket. Hope that makes sense. I want to see if we can get this point of control over 5,800. We're close. Could be here. So hit and run shorts, okay. Hit it, cover, right? Hit it, cover, right? Hit it, cover. But right now, I do not see sellers panicking and putting the stuff on sale. Does that make sense? Yeah, exactly, Travis. Now you're starting to see, right? Remember, I told you that if you'd stare at this crap long enough, you'd see it, right? And there it is. The market came right into this little cost basis, stopped, hit the brakes, turned the car around or the ice cream truck and make people chase price higher. It's beautiful. I'm so glad you saw that. Aaron, do you understand what economically viable means? So I'd love to hold trades for 5 to 8 points instead of two. But if the market gives me two, I'll take the two, right? The thing is, are you profitable on 2 to 3 point trades right now consistently? Ask yourself that. If you're not, keep doing it. Work your way up. If you're already consistently profitable on 2 to 3 point trades, that's great. Reach out to me and we'll see if we can help you out, right? So if you are long, for example, like on that, if you were short 5802, right? If you were short 5802 and you didn't cover it down here, why would you still be short? Does that make sense? You're not going to get 10 points out of that trade. It ain't happening. So you have to have your trades have to be grounded in some sort of reality, right? Of the situation, right? So sell into strength, cover into weakness, because that's what the market's giving you right now, right? And when the time for an 8 point trade comes, you'll hit it. You have to ask yourself, what time frame are you comfortable executing in? And then also you have to be honest with yourself, what time frame am I proficient executing in? Am I a 3 to 5 minute trader, right? Am I a quick in and out trader? What have I gotten good at? Okay, then I can build my skill, right? As I get proficient and as I pay myself, build your skill. I don't know what's wrong with getting paid while you're doing it, right? And I'll take 2 point trades every day on 3 to 5 contracts. I don't know. I'm old, so I'm perfectly happy. 5E minis on 2 points. Thank you very much. Yeah, it's if you're over trading. Everybody's concerned about commissions. I got to ask you guys, how much are you trading? Are you guys popping off 30, 40, 50 trades a day? I do 2 to 6 trades a day, right? What I'll do is So say I was long here, right, on 5, and it took out 96 and a quarter, I'd automatically dump 2 and my stop would be at the bottom there. My stops are all structural. I usually trade with 3 to 5, sometimes 8. I don't trade huge size. I like to get in and out, make a living, right? Everybody wants to say, yeah, I trade hundreds of contracts and I made 50 grand that day and everything. But what I really want to do is just show people how to make a living, right? If you make $300 to $500 a day consistently or every other day, you can put some money away, take it out of your brokerage account, pay your bills, right? Right. I've been around for 33 years and you know, I'll tell you a story. Here, let's see if we can take out that 4 3/4 seller, 4.5. There they are, right there. You see? If they see buyers, they'll lift their offer, right? They'll lift. So there was this French brokerage firm in Canada. They had about 30 people there, and they were what we call grinders. They were trying to make between 400 and $1,000 a day. And everybody would make fun of them because these brokers making 200 grand a month, 500 grand a month, big NASDAQ traders, stuff like that. But when all the hotshots blew up and they needed to borrow cash, they'd go to the grinders. The grinders always had to, I need to borrow 20 grand. Oh yeah, okay, here you go, kid. Right? They always had cash, right? And if you have a regular life, that's okay. Now, if you want to be a prop trader and all that stuff, that's great. Learn how to hold trades longer. We teach you how to do that, right? But if you're a regular person and you have a job and you have kids and hockey practice and this and that, and you want to make some extra income, learn how to do this, you know. And as Cat Williams says, make your paper, boo boo, right? Make your paper, right? Make your money. Don't trade for glory because that's how people lose all their money, right? It's really slow. But do you see competing sellers, Azu? Do you see a short? I don't. Right now, I don't. What's up, AZS? Yeah, make your money, folks. Don't let them try and don't let people on social media and stuff, don't let them try and say, oh, you're not a real trader if you're not holding 50-point trades and mortgaging your house and all that stuff. That's all crazy talk, eh? Make a living, pay yourself, enjoy your life, keep it simple. And of course, if you want to progress to the next level, we can help you with that too. We have traders who are, you know, 6-figure a month traders in our room. All right, what's next here? Very, very slow. Also, trade what you're comfortable with, right, Matt? Right? If you're comfortable trading the micro and you're learning, that's great. Just keep it up, right? You'll get there, right? Just building good business habits is essential, you know? And then, just slight changes of direction with consistency in a positive way that changes everything. We'll see what happens. It's slowly creeping higher and higher, right? As people get short, the more people that get short on the pullbacks, right? Instead of buying the pullbacks, they're shorting, and they're getting caught short here, right? They're short here, they're short here, they're short here. That's why when you come back to those areas, right, the market bids and moves higher. Right? There are mechanics to this. Yeah, be long-term greedy. Exactly, Travis, right? That's our motto, right? Long-term greedy. I don't want to just make money today. I want to be making money in 10 years. And we're always learning. We're always learning. And that's really what we teach in the room. We teach consistency. All the boring stuff, but it works. And people will tell you that it works. Don't take my word for it. Join the room for 7 days, give it a shot, talk to the people in the room, and see whether I'm BSing you or not. Put in the work. And this business, I, I'm not going to lie, it's frustrating. It's frustrating, right? Some weeks you trade like a god. The next on Monday, the whole thing changes, and you're like, what the hell? Right? Because the market changes, right? And these markets with these algos, they're a blessing and they're a curse. They're a blessing because they give us exact trade location and great risk management. They're a curse because they have no rhythm. So sometimes that slow, creepy move, see how it's just slowly creeping? It's like a steamroller, right? It's moving at like maybe 1 mile an hour, but it's still moving. And if you stand in front of it, it'll run right over you. End of the quarter, right? End of the quarter. It'll be interesting to see how that shakes out. See how the cool kids are doing. Crabapple 219. Amazon over 201. Nice. See how they just stopped selling before that 190 level for the last 3 or 4 days. Rotation higher into month end, right? Google, look below and fail 163. Meta, I don't know. Has anybody actually traded? Nobody ever asked me about that stock. Microsoft, we will see resistance at 398, 400. You're seeing it already. NVIDIA looks like a nice look below and fail of 117. The last one was nice. It was a beautiful look below and fail of 117 to 131 and then 136. Let's see if there's going to be a seller at 124 and a half. There usually always is. And oh yeah, that crazy Palantir. Looking pretty good. If we can stay above 94, rotation back up. See, there's the cost basis of that flush. Boom. Right into the area, right? Was there ever, I haven't watched Bear in a long time. Tesla. Tesla look below and fail of 228. And we were talking about that earlier. Up to 261. There'll be sellers at these levels here. Yeah, of course. It's month end on Thursday, so there's going to be some short covering. So the other question is for swing longs, are these moves sustainable, right? Of course they're going to move higher at the end of the month because of short covering, right? But are those moves sustainable after month end? Think about that. Make sure you have that in your hypothesis. I've never had anybody ask me for a bear chart. And that's it for me. Thank you for being with me this morning, afternoon, wherever you are. Hopefully, I'll be a little smarter tomorrow. I'm in day 2 of this fast. So after the third day, I get a bit more normal. Thanks, guys and ladies. And thank you for joining us on YouTube. Come visit us at microefutures.com. Hey, Roger. It's this chat, Roger. So this is live. There's always someone in here. If you need any help, just reach out. We're here to help. DM me in Discord anytime. And we're live at 7:30 in the morning UK time for an hour, and I'm live at 9 o'clock Eastern time in New York for an hour and a half. Thanks, everyone. Yeah, the first days are hard. This fasting. Gonna drop the weight. Thanks, everyone. Stay safe out there. Bye for now.